Let's perhaps start off with a broad overview of the markets and, how we've kick-started this new month of what you're reading of where we are at this stage of the game.
Oh, hello. Thanks for having me. Well, the market has started a very bearish note this quarter. We've seen the stock market decline significantly compared to where it was at the beginning of the first quarter. So I think it's clear that investors are still concerned about the current state of the banking sector, which is still the most liquid sector in the stock market. I think there's concerns about resolutions of the affected banks. Investors right now are not sure. There's been mixed messages about the resolution and how banks that don't meet the deadline will be treated. So I think to some extent investors are more on the sidelines watching. And what I would also notice that there's been increased day traders in the market, as there's very little long-term money in the market at this time. I think because of the very low risk sentiment, there's been a significant pullback in the market, and there's more short-term money moving around now. And so I think that's why we've also seen more volatility as well in the market and the continuous downward trend in the market. So I would say so far investors are still quite cautious, and even though we're getting closer to ending season for banks, and our view is that banks' performance should meet expectation. I would expect that to be a positive catalyst. But I think investors, to some extent, are still waiting to see that materialize. And also, government cabinet was just formed. So I think investors are also trying to see what direction the government will take as well in terms of policy implementation and how sector reforms that empower and other sectors will be driven with this new government.
Let's hone in on the M&A activity we're seeing in the Nigerian banking space specifically, because while on the one hand we've got the likes of Access and Intercontinental Bank, and that deal possibly coming to the fore sooner rather than later, you've got AfriBank and Vine Capital Partners and that deal possibly having collapsed. So there's really a tale of two halves that are being told at this stage of the game. How is this influencing confidence? How are you reading what could potentially play out when it comes to M&A activity?
Well, Relato, with Alishia, with Vine and AfriBank Capital, I think the breakdown right now wasn't, I won't say it's surprising, even though we can't verify the information, because I think what we saw in the press was really more of investigative reporting, and we haven't really seen any press release from the companies. I think it wouldn't be surprising if there would be breakdown in talks, because the CBN had earlier mentioned, I think it was in late May, that the MOU between AfriBank and Vine Capital wasn't approved. And so would expect reserve bidders to step in. And given that there's a strong reserve bidder that is still willing to take up that bank, I would say in terms of resolution of that bank, we'll still expect some deal to be done. It might not meet the 30th September deadline given the timing, and I think the fact that the new bidder would have to start the due diligence process from the start. But I think at the end of the day, we'd still expect to see some positive resolution for the banks. And if you look at the resolution of the affected banks as a whole, we expect 3 banks to meet the deadline, Access and Intercontinental. We expect Intercontinental's resolution to be done by 30th September. They announced that the TIA was signed yesterday. And for Union Bank and After Capital Alliance, I think in terms of talks, they are in advanced stages, so we expect that also to meet the September deadline. And with FIN and FCMB as well, we expect the resolution to be done before the September deadline. So I would say, given that 3 out of the 8 banks will be resolved, there's less banks for the CBN to worry about. The CBN would have to think of how to resolve the 5 banks. I think there are a couple of options on ground right now. There's the nationalization. There's also there's nationalization of the bank. Then, if interested bidders are in talk. I think there's still that possibility of extending the deadline.
In the meantime, we've got investors seeming to be diverting their attention towards the healthy banks. You know, that while we've got resolutions still coming to the table on in a more concrete fashion, and First Bank seems to be a firm favorite there. We've got this bank, the share price up 26% on the month so far. What's your view on a player like First Bank relative to GT Bank that's traded down 6% for the month?
Been one of our very top picks for some time now in the banking sector. At the start of the quarter, it was our top pick, and we still have a very positive view on the bank in terms of valuations. It's trading very cheaply right now. It's trading at book value, and it's been a very long time before since we've seen a tier 1 bank trade. We think this presents a very good opportunity given that operating performance of the bank is still quite strong. We expect ROEs to end at about 14% for the cost to income ratio to improve significantly to about 60%. Asset quality as well, we expect some significant improvement to about 5.3%. So I think if you look at the story for the bank, it's improving significantly. We expect its customer base to also be diversified further as the bank moves up on its transformation process. So the attractiveness, we think there's a very good value proposition at this point. We think coming in at this point would